Hello guys, welcome to our webinar. Sylvain Loganadin with you today. We are Tuesday, the 3rd of March. The title of the peep show of today's peep show is basically the market crash is over. It's time to buy the dip. So it's a title that is very provocative, but in sense that the main message that I'm willing to share with you guys on that webinar is that. The worst is not, I would say, necessarily behind us, but we've lost so much value last week. We've lost so much percentage. More than $6 trillions of dollars were lost and were erased from the U.S. stock market last week. We reached major bottoms level. We lost 15% on the S&P 500, but also on the Dow Jones 30. Now it's time to recover. The market are slightly up. Major stocks such as Apple, Amazon, Google, or even, for example, Netflix are being bought by the market at a discounted price. So now, I'm definitely bullish on the market for the beginning of this week. We maybe could see a reversal and a continuation of the downtrend later during that week, but not for now. For now, I think that this is the time to recover. We also have a meeting of the OPEP, so basically the oil producers. Saudi Arabia will meet Russia in Vienna next in the next couple of days. So basically the 5th and the 6th of March, so Thursday and Friday, they will meet in Vienna in Europe, and they will talk and discuss. They will discuss a cut in the oil production. So basically, the original idea suggested by the OPEP members was to cut the oil production, the daily oil production, by 600,000 barrels, and now Saudi Arabia also and suggested a bigger cut in the daily oil production, and that cut will be a cut of 1 million barrels per day. That will be just not produced by the major oil producers. Russia was not much in was not that much into that, but then said that they will cooperate and they will compare, etc. They are okay. So basically, they will meet with Saudi Arabia, etc. Analysts are right now suggesting that the cut will be a cut of 750,000 barrels a day. So basically, in between the 600,000 and the 1 million barrel cut per day, we have a medium level, and this is the number analysts suggested. But also, Russia is right now in the middle of a conflict, and potentially an indirect conflict with Turkey. As you know, Turkey and Syria had some problems. 33 Turkish soldiers were killed during a rocket hit last week. Turkey just launched and just unleashed a lot of migrants in Europe in reaction to that, and their strategy is basically to unleash migrants in Europe to negotiate with the European Union and ask the NATO forces to help them in their war against and in their conflict against Syria and potentially Russia. So Russia is now in a very complicated situation because they have a conflict to run against Turkey. They have this oil problem that they have also to manage. So I don't think that they will how to say that, drive two wars at the same time. Okay, they will not run two wars at the same time. The first war will be on the oil price. They say that that the current level of the price of the barrels of petrol is fine for them. I think that they will rather focus their forces and their energies on the conflict against Turkey, and then maybe they will focus on pushing back the oil prices up. Okay, so anyway, as you know, a conflict and a war is usually a bullish event for oil prices, and oil prices are basically at a very interesting level We have a 25% discount from the 1st of January. Oil prices just lost a lot since the beginning of the year. We were at 60, 62, 63, 65 dollars per barrel at the beginning of the year. Just look at the current level. We are at $48 per barrel. So that's just incredible and amazing. And for me, we still have room to go higher, and my medium-term target will be between $57 and $60 per barrel. So basically, I just went long on Arya signals. Today, I also took a long position on Monday, so yesterday and last week also, and I bought a bullish position around that level, and I'm willing to let it go at around 62 dollars per barrel. Sorry, this is basically a swing trade strategies. It makes sense in terms of fundamentals. I don't think that Saudi Arabia will let the oil prices go down that much, because they need, in terms of economy, they need a higher WTI fan prices, so basically oil prices. Russia too, if they go on a war against Turkey or whatever, they will need a higher oil prices. They can't afford to have a losing and a so low oil prices. But also, if you look at the fundamental side, the demand that was weakened because of the coronavirus will basically be back at its normal level. The worst is behind us, I think, in China. For the rest of the world, we will see, but China is one of the main consumer of the world of oil in terms of production. They need a lot of oil to produce, to export also products. If they're fine, all the other countries, we do not really care, but we do not really care. I mean, the ponderation of the importance of the other countries' consumption is not as important as China. Okay, so if China recovers, basically the oil prices will go higher, but gradually, not like this, but gradually with time. So it makes sense to be bullish right now on the oil market, and this is why I also went long on the oil market. Alright guys, that was my 2 cents on the market. If you have any questions, feel free to ask your question on the comment section. Tag me on Facebook and also on YouTube. We see each other tomorrow for our next peep show. See you tomorrow and have a great day.